Hi, today we'll be evaluating Chiropractor's financial model using input sheet, revenue analysis, financial statements, and dashboard. The input sheet includes various assumptions made by the business. For instance, investment taken by the owners as well as investors. It also includes different products and services being sold by the chiropractor as well as different operational expenses incurred by the business, for instance, electricity utility bills, employee payroll, web development, and other expenses. This also includes capital expenditure incurred by the business as well as inventory and account payable days. Moving on to the revenue analysis, this is one of the most important aspects of chiropractic financial model, as this will allow us to project 5 years sales for the business. It depends on the number of visitors and the number of visitors being converted into patients. If the number of visitors in this case is increased to 500, the number of customers is increased, which increases the revenue as well. However, it was also dependent on the customers purchasing different products and services. For instance, if the number of visitors is increased, however, the products being bought is decreased to 10%, the revenue is decreased. Moving on to the loan schedule, the loan schedule allows chiropractor to manage its loans. This will allow the chiropractor to have knowledge about the loans taken as well as the interest expense and principal amount being paid to the lender. This will also allow chiropractor to manage its expenses and allow its books to be fairly represented. Moving on to the depreciation table, it allows the chiropractor to evaluate its fixed assets and depreciate them on monthly basis. Furthermore, this also accounts for discontinued assets, which would allow fair representation of the financial statements. Moving to the startup summary shows startup costs as well as startup investors and loans taken by the business. This also shows variable costs as well as fixed costs, which can help the business in long term as they are highlighted specifically, which will allow the business to reduce them over different years. Moreover, this also includes liabilities as well as capital section in summarized way. Moving on to the monthly P&L, this will allow the chiropractor to evaluate its performance on monthly basis using total revenue, cost of goods sold, gross profit, total expenses, and net income after taxes. Similarly, yearly P&L allows the chiropractor to evaluate its performance on yearly basis using revenue, gross profit, total operating expenses, and net income after taxes. Moving on to the cash flow statement, this allows the chiropractor to evaluate its cash and the activities which are generating most cash from. For instance, those can be three categories: operating, investing, and financing activities. Moving on to the balance sheet. Balance sheet summarizes the chiropractor's different assets as well as the liabilities that are due by the chiropractor. Moreover, this also allows chiropractor to manage its fixed assets and liquidity as well using current assets. Moving on to the projection evaluation, this includes the cost of capital as well as the IRR, that is internal rate of return for the business. This also includes the burn rate as well as the minimum investment required by the business. Moving on to the break-even analysis, this highlights the number of break-even sales that the business has to make in order to avoid any sustainable losses. Moving on to the diagnostic tool, this summarizes the performance of the entire business over the 5 years period using gross margin, operating expenses as a percentage of sales, profitability, and profitability as a percentage of sales. It also summarizes other statements such as cash flow and break-even. Moving on to the dashboard, this gives virtual representation of the entire performance over 5 years period. This allows to give a better representation using different charts as well as lines in order to evaluate the business's performance in different areas. Thank you.